All right, guys. So, Tesla, super weak. Q actually green on the day. Q was all the way up to 426s, bro. Honestly, the Q was at like the previous SPY prices. SPY at 485s. So tech is doing really well. Q pulled back a little bit yesterday, but mostly a flat day, I would say. Nvidia kind of helped the market up. Tesla dumped the market. Nvidia up to 622s. How freaking crazy is these Nvidia prices? Those are just ridiculously high. AMD up there as well. The really interesting part is that we're going to have earnings for these coming out over the next month. That'll be the real interesting part. This morning we did have some earnings. Let me see. We had American Airlines, Humana, nothing really big. Southwest, mostly airline earnings today, and Sherwin-Williams, as well as the hated Comcast company. Everybody hates Comcast because they're terrible. Nvidia and AMD cannot run forever. They must correct by now. I mean, I think that's a fact. Listen, it's all love, Yair. It really is. Like, we could agree to disagree, and maybe I'm wrong here, brother. Maybe I'm wrong, but I think that might be a fallacy. I think that I'm not saying Nvidia and AMD can run forever. What I'm saying is that the sectors in those companies can grow so profoundly that the prices could hover around these levels indefinitely. You know what I mean? Deep into the future, and then grow higher from there. They don't necessarily have to have some big crazy pullback. The PE ratios in most of these are like 50 or 60, which is not crazy high. But again, that's something that we saw in Amazon back here, like when PE ratios were that high. Like if we look at Amazon's PE ratios were pretty high at like 110s, 120s, 130s. And so it's not like it's a crazy spot. Same thing with Netflix too. And so just because the PE ratio is high doesn't necessarily mean it has to come back. I'm not saying it won't. I'm sure we're at the very bare minimum going to get at least a small correction. All right. I'm not saying that's not going to happen, because I think that's pretty self-evident, but a bigger correction is not necessary. I don't think it could happen though. Yeah, you might be right. Stock split. I think a split would be a good idea. They were getting up to, most of the time, like what you saw with Tesla specifically. Tesla got up to $600, $700, $800 a share. They did a split. You know. Yeah. Problem is now with the ability to purchase partial share, stock splits are less impactful. Yeah, but every platform doesn't let you. Like that, those are usually niche platforms that offer that, like Webull or Robinhood or whatever. Most platforms don't. Marley, weren't you talking smack yesterday to me? Maybe it wasn't. I mean, maybe you were talking smack about Elon and not me. It's hard to tell context through chat. Let me look up. Let me pull up the receipts really quick. Hold on, sir. Let me look up. Let me pull up. All right. Marley, man, that's me. Is your name? All right. Okay, yeah, maybe it wasn't me, and maybe it was Elon. Okay. Blah 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 blah. You said I disliked the video. Ego sponsored by insecurity. You know. So, I mean, you know. Tesla's the next Apple. Maybe. I don't know. I think it depends on what full self-driving does. You know, what does full self-driving do? I think the future for Tesla is very simple. If they can execute FSD successfully, that is going to change the automotive industry in a massive way. You know, in a massive way. And with that, if they're on the forefront of that technology, they could go crazy and be huge. And they already are huge. They already are one of the largest companies in the world. But yeah. John, just look at the NASDAQ. It is 20% higher in 3 months. That's insane. Right, but you got to look at the yearly perspective, right? So, like, okay, so how much? I think the S&P 500 was up about 24%, right? About 24% in 2023, right? But you also have to take into account what the market has done over the last few years as well. Not just last year, but 2022 as well. And in 2022, if we look at 2022, it started here. It was a bearish year for the most part. I mean, it wasn't that bad. Let's see, we started here in January. Here's 2024. So we were actually kind of flat. Okay, so again, you got to understand this nuance, okay? So here's the argument for we're not extended. I'm not saying we're not. I'm just saying here's an argument for it, all right? Because nobody freaking knows. So we went up 24% last year. The prior year, we went up 0%. And so if you're taking the average percentage gains over the last 2 years, the average yearly percentage gains over the last 2 years, it's going to be 12%, which is not outside the realm of normal. You know, this last year, 2023, was a rebounding year, compensating for the flat year we had in 2022. And so, you know, I think if you, like, as an example here, if we look back, let's see, what did we do in 21? 21, we went from 375 up to 480. So that's a pretty big percentage. Yeah, I mean, the previous year was big too. Marley, you got kind of quiet there all of a sudden, brother. You got kind of quiet there all of a sudden. What happened, man? Just understand, chat. You say something, I can pull up the freaking receipts here, dude. So if you say something negative and then try to act like everything's all good, I might say something about it, you know. It's all love, bro. Look, even if you dislike the stream, Marley, you're welcome to hang out here. Just don't be too toxic, brother. Just don't be too toxic, dude. I'm just messing with you. Buying more shares of Tesla today? Are you really? I'm in Tesla right now. I'm down on Tesla, certainly. But I don't know if I'm adding more to it right now. I might wait a little bit. I don't know. It's right around that 180, 190 pot that people were saying might be good. I'm seeing zero signs of a bear market over the past few weeks. Yeah, I mean, the market certainly doesn't look weak. I don't like Elon at all, as you can see by yesterday. I feel you, man, but like, if you disliked my stream, I cover all streams. It's not like I just stream Tesla earnings, bro. I stream Tesla earnings, Amazon, Apple, Google, freaking Walmart earnings. Like, we stream everything. So it's not like I'm just kind of like only Tesla fanboy that's just sitting around and only streaming or covering Tesla stuff. That's just not true. We cover all of it. Today we're covering GDP and jobless claims unemployment numbers that drop in an hour and a half. Let me get a timer up with that said here. Let me get a timer up. All right, so we got an hour and 23 minutes left until these numbers drop. Do you think this market is propped up by false liquidity and the Fed? Define false liquidity. I mean, what do you mean by that? Please don't look over my chat history. Oh, Sam. No, you're good, bro. I'm okay with some friendly trolling. Okay, I really am. If you start to get too disrespectful, or if you're just kind of sitting around waiting to like attack for whatever reason, then that's where you're gonna get banned. But a snide, sarcastic comment every now and then is usually okay. Amazon flat on the day completely. Nvidia, again, crazy movement on Nvidia. This is one of the stocks that, like, the market would be really red today, I think, because of Tesla. If it wasn't for Nvidia looking super strong all the way up here at 620s over the volume weighted average price, over the 200 EMA, very strong. Again, we'll see if it holds. Hey, with that said, though, Marley said no directed hate. I just hate people pushing likes like we get it. Hey, guys, hit the like button right now. If you don't, I'll hate you forever. Hit the like button right now. Okay, my bad, dude. You know, Tesla targeted 175 by next week. Are y'all buying it if it hits 175? That's the question. Are you buying it if it gets to 175? Let me ask the poll. Are you buying Tesla if it dips under 180? That's the question for today's stream. Are you buying Tesla if it dips under 180? Yes. Buying at 100, 175, only one share. One share might do things, bro. I was in Netflix with one share. I made hundreds of dollars. I had more than one share, but like at the end of it, I only had one share. I covered it yesterday. Do you have the expected numbers? Yeah, I got you. Hold on. Let me put these numbers up. All right, guys. So today we've got a bunch of stuff, dude. We got the ECB decision at 8:15. We've got building permits. We've got durable good orders. We got jobless claims numbers. We got GDP expected at 2%. Jobless claim numbers expected at 200,000. Last time they came in at 187,000, which was much lower than expected. This time they're expecting 200,000. Again, durable good orders expected at 0.2% for core durable goods, which is the biggest ones. GDP data, jobless claims report. A lot of stuff dropping. Again, jobless claims, unemployment numbers expected at 200,000. GDP expected at 2% quarter over quarter. Durable good orders expected at 0.2%. ECB decision is expected to be a pause from 4.5% to 4.5%, so a pause. And rate hikes for the ECB. Building permits expected just under 1.5 million is what the data shows today. And again, that is coming out in about an hour and 20 minutes or so. An hour and 20 minutes. So be ready, guys. Be ready. We're going to cover it live as soon as it happens. I breed boas and pythons. Is that a good business? It seems like I used to love snakes, bro. Like, I was genuinely obsessed with snakes. I had pet snakes my whole life. Boas, I loved, like, red-tailed boas were really fun to raise. Ball pythons were super stubborn and didn't like eating at all, and they had to have everything freaking perfect. They're the divas of the pet snake market. I had a lot of garter snakes. My favorite snakes were corn snakes because they can be in these really, like, pretty cool colors. But they're also super easy. I could throw a freaking guppy in that cage, and that corn snake would eat that thing up so quick. I could throw a mouse in there. Corn snake would eat it up. Corn snakes or rat snakes are kind of what hang around outside of farms. And farmers don't hate them necessarily because they kind of help pest control a little bit. But yeah, I love snakes, man. Love snakes. Never bred them, though. But yeah. My favorite snake is my ex. Yeah, I feel you. Tesla on the pump? I wouldn't really call it pumping. Albino red-tail boas? Yeah, those are fun, man. I really was obsessed with snakes as a kid, you know. I've had pet snakes my whole life. We even had my daughter a pet snake a few years ago, but he passed away from some disease that we're pretty sure he had when he left the pet store. Rest in peace, Pablo. the corn snake. But yeah, Nvidia pulling back to 620. Let's see if it bounces here. It's under the volume weighted average price, but it's still over the 200 EMA. And so ES is making a triple top here. Let's take a look. Yeah, I mean, we do have a triple top. It's really just a range, though. So, I mean, look. It's just a flat range, neutral range, I would say. But, yeah, we are hitting the top of it. So, we'll see if we reject here. The E-mini looks incredibly flat, probably waiting for economic reports. What's your view on maybe starting a small position in an overseas name? Seems super oversold, although economic side is crazy. Yeah, I mean, if you can find some stuff that works, I would just be careful. A lot of them, like, you want to be very careful labeling things oversold because, like, some of those markets are just weak. They're not oversold, right? And if you might be asking at home, what's the freaking difference? I'm going to tell you the difference here. The difference is that weakness is from bad companies. Oversold is from like price action, overreactions. And so penny stocks are not necessarily oversold. They're just bad companies. You know, they're just, most of them are going to long-term trend down. If Apple pulls back 20, 30, 40%, it's pretty much oversold most likely, right? So there's a difference there. And and I'm not saying you're wrong. I'm just saying you want to make sure to understand that the companies that you're targeting are actually oversold and not just super weak, you know, and there's a difference. So check the PE ratio a lot of the time. That's very helpful in terms of how much the company's bringing in. If the company's not bringing anything in or it's losing or whatever it is, then it might not be oversold. It might just be weak. So check the PE ratios behind them. If you don't know how to calculate them, you can calculate them pretty easily yourself by just adding up the 4-quarter EPS to get the yearly EPS and then taking that number and dividing it by taking the price of the stock and divide it by that number. And then you're going to get the PE ratio. Anything under right now in this market, I would say anything under like 40 is good, you know. Yeah, the problem with a company like that, though, Darren, is that the government is so unstable over there, brother. The government is so unstable. Like, if you don't know the story of Alibaba, so old Jack over there at Alibaba was one of the richest people in the world, you know, 5 years ago, 10 years, 6 years ago. What happened was that he came out very critically of the CCP over there, and they basically took over his company, forced him out, and he disappeared for years. For years, that man disappeared. The value of Alibaba dropped billions of dollars, to a point where now I'm pretty sure they own a majority of it. He is not as influential in the company anymore. And yeah, there's just a lot of reasons I don't invest in overseas companies like that. There's just too much instability there. I don't know what they're going to do. I don't know those markets like that. You know what I mean? Like, I just don't know those markets like that, you know? And so I'm not going to put too much money there because I just don't know the markets. And I think there's some question marks regarding long-term safety of investing there. You know what I mean? But maybe I'm wrong. Maybe there's good opportunity. I don't freaking know. PE for fast-growing companies is meaningless. Sure, but I'm not talking about PE for fast-growing companies. I'm talking about the PE ratio for super weak companies that have pulled back heavily. I'm trying to gauge whether it's a genuine move or whether it's just a exaggeration pullback where it might be oversold, you know. Yeah, but I mean, Marley, they've been saying that for years, brother. Just to give you the other side of that, man. Again, and I run this live stream, like, I've covered all the major economic data, earnings, FOMC meetings, Jerome Powell press conferences, inflation data reports, GDP reports, jobless claims every week. We cover all this different stuff, right? People have been saying this for 3 years. They've been saying, oh, the economy is... And again, it was much more valid of an argument a year and a half ago when inflation was freaking almost 9%. You know what I mean? And the Fed was raising rates aggressively, trying to push inflation down, and it wasn't going down, and the labor market was still super strong because everybody had to work. Like, it was a much different time a year and a half ago, and I think those comments would have been more valid then versus now. Like, right now, inflation is certainly more under control. The economy is certainly better than it was. The labor market's still pretty strong, and so that's kind of a dampening thing on what the Fed wants to do, but they're expecting a potential pivot now. You know, gas prices are noticeably lower. This was at a point where gas prices were $7, $8 a share, $6, $7 a share. And so, yeah, it's just a different time now, and I'm not saying we don't get some crazy big pullback or anything like that. What I'm saying is that I've heard it all before, and most of the time people who push that are wrong. You know, crashes are very difficult to predict. It's not something that happens all the time. And if you watch the media too much, you're going to get wrapped up in sky is falling, doom and gloom predictions. And a lot of people are just really rigid and stubborn with it. So they never stop to think about whether they're wrong, because it's kind of music to their ears. They want to see it. They want to see the market fall for whatever reason. And so, you know, people tend to overpredict it. Yeah, and maybe you're right. I don't know. You know, maybe you're right. Y'all don't like my background music, guys? How dare you? All right. All right, look, I'll go to my saved music. My saved music is a little bit better. The economy is better based off of employment, jobs, inflation, prices. It's an election year. The S&P 500 and the markets are doing better. So I mean, it depends on what gauge you're looking at. Debt constantly goes up. I mean, that's something that's pretty obvious. I don't know if that's the biggest gauge of weak economies. I think inflation has gotten more under control. The stock market is doing well. The labor market is still in a good spot. You know, GDP is still growing. At least it has been. And so it's like we're not near a recession yet. You know what I mean? At least not yet. Again, maybe we do, but we're just not there yet, you know? And again, we could agree to disagree. It's all good. Maybe you're right. I don't know. Yeah, Netflix is crazy. I finally took profit on it yesterday. I think it was a good move. I took profit at like 550. All right, AMD at 180s. We got Amazon still trying. Again, Nvidia moving the market crazy. Here's the NASDAQ. We put up like the Q here and watch the Q. Also, if y'all haven't already, check out our Discord, guys. Our Discord completely free. Doesn't cost a penny. It's been getting some more activity lately. We're trying to grow this activity up a little bit more. I've been slacking on it for the last, little bit. But join our Discord. It's completely free. It's where you can actually talk to me outside of the stream if you want. Yeah, commercial real estate's really in a struggle, but that's for other reasons. Like, commercial real estate's struggling because of technology advancement and evolution. Like, remote work has gotten much easier. Margins are better. Businesses recognize that. They're starting to focus less on filling out warehouses full of customer service representatives and stuff like that, and instead just letting them work remotely through software. And the margins are way better. And I think they're realizing that everybody's happier. It's easier. You got less HR problems. You got less, stuff like that, and ultimately it's just easier. And so I think businesses are obviously starting to focus on that more and more now, and I think that's something that you'll see happen in more and more ways over time because of technology growth. It's all a rigged game. You can see the movie David and Goliath, Wall Street, about GameStop stock. Yeah, I mean, people have to understand, like, I've tried telling people this for a long time, and I think people are finally starting to recognize it. But, like, the biggest edge you'll ever have in markets is long-term value investing in index funds. It's the biggest edge you'll ever have. You don't need to, if you don't have time, you don't need to scout out all the best stocks or do whatever. Just stick money in the SPY and the NASDAQ and the E-mini and whatever you want to stick money in and just chill. Most of the time within 5 years, you're going to be up pretty big, if not, almost certainly in 10 years. And, diversify. Like, it's all inflation hedges, right? So again, if you got 100K, in my opinion, again, I'm not an investment professional. I'm not liable if you lose. You always got to make your own assessment of the market. I have no idea what I'm talking about. Let me put my banner up here. My banner. And we're going to use this. Remember, I am terrible at this stuff and have no idea what I'm talking about. Good luck. We're citing CFTC Rule 4.41. If we trade on Top Step or whatever, and it's hypothetical or simulated, unlike an actual performance record, they do not represent actual trading, so forth and so on. Make sure to read this. Remember, I am terrible at this stuff is basically what you want to know. I have no idea what I'm talking about. And, yeah. But, anyways, with that said, if I had 100K, what I'm doing is I'm buying the NASDAQ. I'm buying the SPY. I'm buying real estate. I'm buying bonds. I'm buying gold. Maybe going to pick 2 or 3 big boy, like Magnificent 7 tech stocks to invest in long term. And I'm just kind of sitting on that for years. That portfolio is almost guaranteed to make money over like a 10-year period. Amazon falling down now. Everyone loves long-term, of course. It gives you peace, but doesn't mean it will work forever, especially on this. Yeah, I mean, okay. I always hear that argument. Like, I hear the argument a lot with bonds, where I'm like, hey, man, you could, like, people who are like, yeah, I don't trust the stock market. It's like, all right, well, buy bonds. It's guaranteed returns. Like, right now, the 10-year, like, if you loan the U.S. government money for 10 years, you're going to make almost 4.2% on that money, right? So what that means is that if you loan them $100,000, every year you're going to make $4,200 in interest. So you're going to earn 4.2K a year based off of that 100K loan to the government. And then at the end, and it's guaranteed. And then at the end of that 10-year period, you're going to get your 100K back. So over 10 years, you're basically going to make almost 42% return in 10 years. And it's guaranteed. And so if you're sitting on money and you don't trust the stock market, bonds are a good way to do it. And the argument I always hear is return is, yeah, but what if the U.S. fails? It's like, dude, if the U.S. fails, you got a lot bigger problems than your bonds not paying out. You know what I mean? Like, if the U.S. fails, you're going to have huge problems, like much bigger problems than, oh, no, my bonds aren't paying out. And so it's going to be insignificant regardless of it. And so, again, I know a lot of people, when I'm saying this, because I know a lot of people sit on, like, big sums of money, like cash. They're just sitting on cash. Why? Like, that's the worst decision ever. You're just losing money as time goes on. Now, bonds are a good diversification tool. SC, he said, so they're for senior citizens. They can be, but again, they're just diversification. I'm not saying put everything in bonds. I'm saying if you're going to build a long-term portfolio, I'm buying index funds, bonds, gold, real estate investment trust, probably, and I'm just letting that sit. Maybe some tech stocks. All right, and again, today we got GDP data coming out. Let me put this number up. All right, so GDP data is expected at 2%, and jobless claims are expected at 200K. They both drop live here at 8:30, along with durable goods. All right, so we're going to put this up on screen so everybody knows. GDP data is expected at 2%, and jobless claims are expected at 200,000. They both drop live here at 8:30. Prepare for the incoming train, which will change your opinion about long-term easy money. I mean, listen, man. I've been hearing this, like, again, do y'all know how many people come here regularly and predict some massive market crash? You know how long that's been going on? That's been going on for like 5+ years. Every freaking year, every freaking day for the most part, somebody's coming here and telling me that we are imminently about to face some big shocking market disaster and crash. You know what I mean? And I've seen it all before. I really have. Most of the time they're wrong. Most of the time the market ends up pushing up and they just kind of crickets, silence. They just end up changing their username or whatever they do. And I'm not saying crashes can't happen. What I'm saying is that a lot of people are too easily influenced by big time like influencers making these crash predictions, because crash predictions get clicks, right? Doom gets clicks. You know, you see it on the news, you see it with like other market influencers where every video, every prediction is this is about to crash now. You know, and I think that chips away at people over time, and eventually over time people end up buying it and don't realize they're missing out on one of the, like we heard people say that a year and a half ago, and the market did 24% right afterwards. And so, you know, over the last century, it's given you about 10% on average yearly. You know, we have crashes, pullbacks, but still. Yeah, I mean, that's basically what DCAing is, Anonymous. In that case, you just buy forever and you always win. Well, if you can hold it long enough, sure. Do you remember 2008? I do remember 2008. And again, the easiest way to put this, guys, is the people who lose most in those big macroeconomic events like 2008 are the people who sell. Like, look, okay, so here's the S&P 500, right? We'll put the SPX up because this is the actual S&P 500, right? Here's 2008. The people who lost the most in this environment are the people who sold. You know, you could see by 2011, so within 2 to 3 years, the market had already rebounded right back up to where it was prior to the disaster here. You know, so within 3 years, the market had ripped up prior to where it was prior. And so the people who lose the most in these big macroeconomic disaster crashes, events, whatever you want to call them, are people who get emotional and sell. I'm not saying you should never sell, but the people who lose the most are the people who sell. You know, they're the ones that get emotional. They're selling down here, you know, and one of the reasons is because you got a bunch of people telling them it's going to keep going. They're saying, oh, the market's going to go to zero. And so they're saying, oh, no, let me get my money out. And then they miss out on this huge rebound, you know, back up. You know, but again, we can isolate a couple year period, but when you zoom out, guys, look at the following decade. You know what I mean? So like, this is 2008. This is the next decade. You know? I mean, even 2008 was kind of weird. You can look back at a better argument for you guys would be the 2000 crash. Right, like in 2000, they called it the .com crash. It wasn't really a crash; it was more of a correction. But this is a better argument because this is a long-term downtrending market. It's one of the only ones. Like, we've only had 3 incidences like this where we've downtrended and had bearish years consecutively. Only 3 times in history has that ever happened. One of them was in 2000, and it was the .com crash. But again, you zoom out here, You know, and again, you can kind of see we've already had a correction back in 2021 and 2022. We've already had a pretty major correction. You know, now we're back up over that now, but yeah, we'll see. Bears are always in here screaming crash. It never gets old. Honestly, that's why, like, people want to understand why my bias, why I talk about this so much. It's because, like, dude, every day we got somebody telling me the market's going to crash. It really is like clockwork. Every day somebody's telling me the market's about to crash. Market could rip up 20%. It could dip 2% or 3% or whatever it is. Somebody's telling me the market's going to crash. Maybe we do. I don't know. Maybe we do. I bought Rivian at $100. Eef, that's a bad spot, man. I'm assuming you bought it like right after the Amazon news where they got behind it. Yeah, I don't know. I don't know what Rivian's going to do. I think Rivian's got a better chance to succeed than some of these other companies, but I still think it's going to be a struggle. Hiccups or could potentially happen along the way. I don't know. I'm not a big investor in Rivian. I just don't trust it enough. What about the mortgage crisis? Yeah, I mean, we just covered the mortgage crisis. Again, the mortgage crisis was back here, 2008 mortgage crisis. That was right here. But again, like, the people have to understand the real edge. I think a lot of investors, a lot of traders get involved with markets, and they're just super skeptical. They think the world's always going to end, the sky's going to fall, the market's always going to crash. And again, crashes happen, but they don't happen that often. They happen on average once every 10 to 15 years. And so they're not something that happen like every 2 years like clockwork, like the chat acts like sometimes. And if you zoom out, even on these major crashes, like, look, the mortgage crisis was this. Like, it's a pretty small blip when you zoom out. It's a pretty small blip. And again, the market was back up by 2011, back up to where it was. And then the following decade, the market just flew up. And so I guess the lesson here, in my opinion, and again, I'm going to preface what I'm about to say with, I have no idea whether this is going to work. Don't copy me. I have no idea what I'm talking about. But I guess the lesson is, I'm DCAing when we crash. If we crash, I'm buying stuff up. I think that's the only option. In 2020, that's what I did as well. Like, in 2020, that's what we did. In 2020, we bought United Airlines, we bought Uber, we bought MGM. And a lot of people made fun. A lot of people talked smack. A lot of people told me they were garbage picks and all this stuff. And in hindsight, wildly correct. Wildly correct. MGM ripped up huge percentages right afterwards. You know, here's MGM back in 2020. We bought this dip right here. And again, I think we bought like call options is what we bought, like longer term call options. And again, you can kind of see huge pushback. Within a year, it was up to almost $55. And so same thing with United Airlines. We bought this, wrote it up really nicely. Yeah, you just don't over leverage yourself. I'm not saying we're not in a bubble. You know, what I'm saying is that different sectors pop off without question. Like, you see a lot of different sectors pop off. Again, 2018, you had what was called like a cannabis boom in stocks. A bunch of cannabis stocks ran. So like sectors pop off every now and then. The question is, are they actually inflated, or is it just a growing sector that's influencing the market positively? You know, and again, I'm not telling you which one it is. I don't know. It certainly could be a bubble. I know the PE ratios are very high. But sometimes the thing to understand is that stocks do sometimes catch up to that. They do catch up in terms of earnings potential. Sometimes they catch up to bubbles, and the bubbles don't burst as big as people think they will. You know, again, a lot of people said NVIDIA was short at 400, and now NVIDIA's at 620s, 630s. And so Yeah, airlines bounce back up. I mean, I remember buying United Airlines. When I bought it, it was at like $20. It was at like $25. It's at 40 now, so I mean, it hasn't appreciated like the rest of the market for sure. AMD testing highs right now as well. I don't know what the market's going to do today. It really depends on what GDP data, jobless claims data, and all that stuff shows up as. So again, I really don't know what the market's going to do. AMD just broke highs. It's now at 180.50s, 180.50s. We have GDP data, durable goods, jobless claims, unemployment numbers. So we got a lot of stuff. Yeah, let's do a poll. I don't think we've done a poll yet. Will GDP data and jobless claims come in better or worse than expected? There you go. 10% drop coming. Yeah, maybe. PayPal has a CEO. Yeah, PayPal has that conference. I can't remember what it was, but PayPal does have some stuff coming out. I'm in PayPal as well. We're in a small position, but our average price in PayPal right now is like 51.40s. 51.46 technically is our average right now in PayPal. Yeah, jobless claims unemployment drops weekly at 8:30 on Thursday every week. Why AMC not going up? Well, movies are struggling. They've diluted their company so much to a point in which a lot of people bailed on them. AMD still breaking highs at 180.70s. Yeah, we got the Fed meeting next week. It's a big week for sure. Huge week for stuff. You think about oil? I think oil has been pushing up the last few days. I'm in Exxon. Binance, I think, is kind of sketch. How much years did it take you to learn about trading? I mean, I've been investing in trading for a long time. I mean, I've been like short-term trading for 8 years now, 7, 8 years. And again, I'm not even claiming to be good. I'm not even claiming to be the greatest, most profitable trader ever. You know what I mean? Like, that's not really what my channel's about. Some people try to label me like that, but I'm really not a day trading guru channel. It's just not something that I like. Like we mostly cover economic reports. I think if you listen to the stream, most people understand that we're a stock market news channel, really. Like we day trade and swing trade and invest and stuff, but we're mostly like a stock market news channel. Bitcoin is still dumping. Yeah, I mean, crypto has been falling crazy. It's back up a little bit, though. It was under 40K for a while yesterday. But again, this is just a small dip, so doesn't necessarily mean it's going to fail. Yeah, I'm not going to be specific here about anything, brother. Yeah, I'm definitely the most humble person ever in the world, you know. And so, I mean, when you're top 3 most handsome traders ever, I think sometimes, humility is something that you just need to have. And so, yeah, we try to do our best to stay humble in this environment, in my fancy office library, with my cool trading setup and my, amazing YouTube channel. Top 3, last bit of technical analysis, I suggested 42K is the next target. Maybe. AMD's pushing up right now, guys. Look at AMD. And NVIDIA just broke highs, too. Look at AMD's weekly chart. What a crazy chart. Up to 180s. Look at AMD. AMD has earnings next week, too. They have earnings, I believe, I think it's on Tuesday of next week. Let me see. I know next week's freaking crazy busy, dude. Next week is like hella busy. SoFi earnings Monday. Supermicro Monday evening. Is Supermicro a big enough company to stream the earnings? Chat, you let me know. Tuesday, we've got Pfizer, GM, UPS, a bunch of economic reports next week as well. Yeah, we got AMD, Microsoft, and Alphabet numbers on Wednesday. What earnings should I cover? Should I cover AMD, Microsoft, or AMD or Microsoft earnings? Which ones? AMD or Microsoft, guys? What do you think? AMD or Microsoft? I don't know. Part of me wants to cover AMD, but I know Microsoft is one of the largest companies in the world, and so I don't know which one to cover. I can cover both, but Microsoft. Yeah, I think Microsoft probably the one I should cover. Coffee covered carpets. Yeah, dude, honestly. If you turn, luckily I never turn the lights on here. If you turn the lights on, everything's freaking stained on the floor, bro. They say messy people are more intelligent, so this must mean I am just a freaking genius in here. John, be honest, you're the 3rd best in recent history. Definitely top 3. Microsoft more relevant to the S&P. Yeah, Microsoft's the most heavily weighted stock in markets right now, except for maybe Apple. I think Apple might be more heavily weighted. I think, maybe. Put a nice rug under me. I never understood why those rugs were so expensive, though. I know they're hard to make, but, I can't, listen. I like rugs and stuff. I don't like rugs enough to spend $5,000 to $10,000 on a freaking rug. It better be, a bear rug. Is the only rug I would spend that much. Nothing against, the rugs over there. I'm sure they're, really nice rugs. But I'm not the type of person to spend $5,000 or $10,000 on a rug. I just never have been. Again, I'm not saying it's not worth it. I just couldn't make myself do that. I don't pay attention to a rug enough to spend thousands of dollars on it. Maybe Carol might, but I'm not. Yeah, we do have the ECB rate decision in about 30 minutes. 30 minutes. 100 for that price? Yeah. I mean, hey. Rug margins have got to be the best margin businesses ever, I was with somebody we knew, and we went to a rug place, bro, and every rug they had was 10, 15,000. sitting there like, dang, bro. Like, why? You know? Like, that's for people who have so much money that they just don't even care. You know? Like, oh, 10K on a rug. Who cares? Yeah. They've got to be buying them cheap and then reselling them for 10x, you know? And I'm not mad. I respect the hustle. Let them do their thing, you know? But yeah. All right, guys. So AMD did rip up. Nvidia's still up there here. We got 40 plus minutes until the earnings, or until GDP data, jobless claims, unemployment numbers come out. Ice cream has great margins. John's ice cream cones is gonna be my next business. Rugs are collectible. I understand that, but like, I don't know. It's just not my style, you know. If you don't mind answering, John, does earnings for a specific stock also mean futures like the NASDAQ too? Yes. So earnings, let's take Apple earnings as an example. Apple's the most heavily weighted stock in both the NASDAQ and the S&P, right? And so the NQ is the NASDAQ, brother. That's the NASDAQ 100. That's an index fund. But I'm assuming you're speaking of the futures contract, which is a very similar thing. It's still the same thing, basically. It's just a different vehicle for trading the NASDAQ 100, Anthony. So the NQ is the NASDAQ 100. It's just a different vehicle in futures for trading it. But it's the 100 largest companies in the world. And so if we're talking about a really heavily weighted stock like Apple, if Apple rips up 20%, the NASDAQ's ripping up with it, you know, almost certainly. It's never 100%. Nothing's ever 100%. But if the NASDAQ's making it, if a heavily weighted stock is making a big move, it's almost always going to influence the NASDAQ in a similar way. Maybe not as big of a move, maybe not to the same degree as the actual stock with earnings, but still going to have some influence on it for sure because it's heavily weighted. It makes up a big percentage of that fund, if that makes sense. AMD still breaking highs. Nvidia up to 624s almost. Yeah, I mean, I think Microsoft is now the biggest company in the world in terms of market cap, but in terms of weight, let me see. S&P 500 weight list. Oh, you're right. Microsoft is number one now. So Microsoft number 7.23%. Apple is now under 7. So Microsoft, actually, you're correct, is now the most heavily weighted stock. Nvidia is number 3. Amazon's number 4. Google is number 5. Meta is number 6. Google Class C is number 7. Burke is number 8. Tesla is number 9. So again, big influence here, guys. Big influence. Hey, what's up, Chester? All right, guys, we still got 40 minutes. Yeah, again, guys, I'm not in the market to buy carpets. I'm sorry. I know I see a lot of people like, yo, I'll send you a carpet. I don't, no offense, I just don't care enough about rugs and carpets to, you know, go through the hassle of doing that. No offense to you guys. I appreciate the support. When it comes to the GDP report, what numbers will cause a bullish or bearish reaction? AMD all the way up to almost 182.50s here. Are you bearish or bullish in quarter one of 2024? I really don't know. I'm bullish, but it might just be confirmation bias. I think it's an election year. Typically, markets tend to try to do well those years, but I think there's also been some arguments against that. Chat, are you bullish or bearish? Are you bullish or bearish? Chat, let me know. All right, guys. Again, NVIDIA up there at 624s. Q still trying. It's at 426.70s. 426.70s. Bearish, bearish, both. In never history has the market closed in red on an election year. Would be the first time. NQ double top, so I'm momentarily bearish, bullish. Interesting reading the chat. Bullish, bearish, but anything can happen, so ready for both. I think that's the right move, is just being ready. Polar bear. Will SoFi go up on Monday? If it comes in good for earnings, maybe. If it has crazy good earnings, possibly. But we'll see. Again, we don't know. Again, y'all slap the like button, hit the subscribe button. We still got almost 40 minutes left here. AMD's rising pretty crazy, guys. Let's put up AMD chart. Look at AMD. All the way up at 181.40s. Look at that chart. Pretty strong. PayPal going to crash, sell. People have told me to sell constantly. I never listen. Could you quickly open the gold chart? Yeah, we can look at gold. There's gold. I'm going to actually put the 3 charts up. I was doing that for a while. I don't know why I stopped. But yeah, there's gold on the left. There we go. Here's gold right here. Gold at 2014. So gold has actually pulled back some. We can put like AMD up here. Amazon at 155.50s. Intel earnings this evening. Yeah. Rug hater. Top 3 biggest rug haters in the world right now. Is it worth it to gamble on earnings, meaning getting long short a few minutes before market closes on earnings day? For me, it's a subjective thing. For me, no. It's incredibly risky. It's a gamble. It's just not worth it. Most people are going to, again, like the edge that you're going to have taking huge positions ahead of earnings is so freaking low. It's just a huge gamble. It's just unnecessary. You know what I mean? You can try, but the edge is so low, it's a coin flip. You know what I mean? People are just justifying gambling. So they're taking huge option positions. And I know a lot of traders that do this too. They take huge option positions. And again, it's kind of crazy because it's like, look, I know a lot of traders that would gamble crazy big on earnings, right? Like they would take huge option positions with earnings, like these crazy big positions ahead of earnings, right? To where they're taking massive risks ahead of these earnings reports. Say they're buying like huge call options or huge put options in like Tesla or Apple or Amazon. And then they make money sometimes. But when they lose, they destroy their whole account. They lose everything. They lose everything they spent on those options. And then they get really kind of emotional about it. And instead of being honest about it and being like, yo, I was gambling, like this was dumb, they instead get mad at me. They get mad at the messenger for it, you know? And then they start to get really bitter, and it's like, it's just an emotional thing. Like, I've known a lot of traders that do that for whatever reason. And again, over time, it's kind of reinforced my view of, you don't know what the heck is going to happen in earnings. Like, you don't know. A company could post better than expected EPS, revenue, guidance, and drop 10%. You know, a company could post terrible earnings, terrible guidance, terrible EPS and revenue, and rip up 15%. You have no idea what the stock is going to do. You know, there's so much nuance that comes with price. Like maybe the stock ripped up 10% in the preceding weeks leading into earnings. And so even though it had good earnings, it still didn't do anything or it dropped. And so traders, there's just a lot of nuance that's hard to gauge, hard to read. Traders are super picky in terms of earnings. They'll pick out one thing that just doesn't sound quite right, and they will just magnify that one thing, and the stock will drop crazy. It's just there's a lot of volatility. And so taking big positions is just, a gamble, I guess is the easiest way to put it. I used to do that on Netflix for years. I would say 10% is probably too much, but it depends on what you're doing. Now I'm in a tough month. I didn't gain anything but losses. I think a few bets on earnings will make me back again. That's a terrible idea, Sky. I wouldn't do it. I would be very careful. Again, do whatever you want to do. I'm not an investment professional. I'm not liable if you lose it. I have no idea what you're talking about. But with that said, I mean, it seems like a gamble, brother. If you find yourself trying to win back your losses, stop and walk away. You know what I mean? Seriously. Like, if you find yourself trying to win back if you're that emotional where, you've lost a bunch, and now you're so desperate to win it back, you want to take huge gambles, that's how most traders lose, right? Most traders specifically lose their accounts. Like, you want to know how traders destroy accounts, specifically new traders, is what they do is they take a huge gamble, and then maybe they win, and then they take another huge gamble. Maybe they keep adding to losses. The stock drops, they add to losses, they eventually win. They do that a couple times. They think they've got some amazing system that's going to teach them how to just be wildly profitable over time. And then eventually they lose, right? And when they lose like a big percentage of their account. And they're so emotional about it. And they're so desperate to earn that money back that they take larger size. They take more gambles. They take a larger risk. And then they lose more. And then they do it again, and then they lose more until they get to a point in which they've lost so much money that they just kind of say, well, screw it. I'm just going to YOLO my account. I'm just going to put up all my money, take one big gamble because I've lost so much already, and then they lose on that trade, and boom, their account's done, right? Like, that happens so much in trading. And so, again, your job is to trade small enough. Get your mind right. Trade small. You don't need to trade crazy large. You don't need to risk your account. Like, that's a gambling mentality. Like, that's a guru pushing you can turn $1,000 into $100K in 3 weeks if you just buy my day trading course nonsense. Like, don't do it. Stop and walk away. Oh, I'm definitely talking from experience, Freddie. 100%, dude. Like, yeah. We've all done it. Let's just be real here for a second. If you day trade, if you day trade, you've done that in the beginning. I promise you. At least a large majority of you guys have if you day trade. Anybody that says they haven't is full of crap most of the time, you know. Almost all day traders lose their first few accounts. I've certainly done it. Amazon breaking lows right now. Amazon breaking lows. Yep. Because it's a normal thing. It happens. But again, over time, the big overarching point of this is to scale the heck down. Scale down your size. You don't need to make crazy big returns. And in fact, the larger you trade, the more risky you are in your trading. Like, the larger you're trading, the more likely you are to lose your account. You scale down your size. You learn how to trade with small size. If you have a big sample size of success trades, then you can scale up a little bit more if your account's big enough. And then if you have another decent sample size of successful trades, then you can scale up some more, right? That is the procedure, in my opinion, of it. If you go right out the get-go with crazy big size where you're risking 20-30% of your account per trade, you are gambling away. And it is almost certain. You might have some early success. Eventually the check's going to come. And so just be smart, guys. I blame marketing, though, Jared. Jared says, I find it comedic how little time and effort everyone puts into trading expecting to make it. It is hilarious to me. I blame marketing, brother. I blame marketing. Like, you look on, like, and again, it's kind of the trader's fault. Like, you look who gets the biggest on YouTube. It's traders that are pushing out crazy big gains that are not sustainable. Like, oh, look, I took my $5,000 account and I turned it into $50K. Like, you know, the likelihood of that happening, I don't care how good of a trader you are. The likelihood that you're going to do that is so infinitesimally low, even if you're super skilled at day trading, that pushing that to people just to get clicks is toxic. It's freaking toxic. If you want to be able to make thousands of dollars a day consistently and specifically safely, you need to have, like, deep into six figures to do so safely. You know, the most elite investors and traders in the world make 30%. You know, and that's the elite of the elite. And so people acting like you can make 500% a year every year if you just follow their day trading course. Again, the reality of it is, and I say this a lot, but the reality of it is, if traders were that good, and again, I'm not claiming to be good, right? Like I never have. I'm not claiming to be some super profitable guru-like mentor day trader. If they were that good, you would see their broker statements every month. You would see their broker statements, because what better, more credibility boosting thing is there than showing your broker statements every month? You don't see that. You only see broker statements once out of every 12 months, maybe, which is probably the only month they were actually profitable. Because again, if you're selling a course, you know, you showed your broker statements every month and showing profits, easy money, you know, but you don't see that. Why do you think that is? It's because most people are full of crap. And again, that's kind of what we designed my channel around. Like, I'd rather just be honest. And so, yeah. I'm going to quit trading, start selling rugs. Hey, good luck, brother. I hope you make some money. I'm talking about whatever you want, Sky. You know, I certainly like reset on some of these funded accounts and lose funded accounts. I mean, everybody does. I certainly did. Again, I've never really hid that or strayed away from that. Again, it'd be one thing if I'm out here claiming to be some big day trading guru trying to sell you a course for $5,000 in a mentorship program. That's just not what I'm doing. Hey, thank you, Tash. I appreciate you, bro. Thank you. Visa earnings. It's the Donald Duck song. We're not gonna get specific or religious, Jarrett. Please and thank you, kind sir. Yeah, so again, I'm looking up earnings today. We do have some earnings. Specifically, we got American Airlines, Humana. This evening, we got Intel, Visa. I'm probably not going to stream these, though. They're just not big enough of a company. Maybe Intel has grown to a point, but I don't think it's grown enough. Do me a favor, hit the sub button, guys, if you haven't already. Hit the notification bell. I appreciate the love. Thanks so much. I'm going to put it in sub-only mode as well, guys. So if you haven't already, subscribe. You know you want to. Looking at our poll numbers, 60% of people think they're going to come in better than expected. We're going to do a GDP poll. All right, so we got a poll now on Twitter also. Oh, I see the coral albino. That's pretty cool. Yeah, I think they need to do some better schooling stuff. No, I'm not going to be streaming Intel earnings, unfortunately. Probably not, at least. All right, guys, we got over 20 minutes. We got about 25 minutes left still. Volume seems pretty low. Most waiting for GDP data. Yeah, I mean, a lot of the time around these reports, we have just flat economic action here. Tesla flushing down. Good time to buy Boeing. I don't know. I've already taken most of the profit off of Boeing. We're only holding a little bitty percentage of it left, and we're still green on it. You know, there's gold. AMD pulling back a little bit too. I think a lot of stuff is just kind of waiting for this economic report to drop soon. We might buy a little bit of some of these other stocks. There we go. AMD at 181s right now, still pulling back some. We just bought some stuff. I might buy a little bit of Amazon here. No, see, Amazon's still a little bit too high, I think. We might add. Could we add to Boeing? I think we could. I might add a little bit more down here. But see, my average price is already, like, just to show you my Boeing trade now. My average price in Boeing is 205.40s. We're up about 30 bucks on the last little piece that we're holding. But again, this is just the last little piece. I'm gonna go ahead and add a little bit to this. Messes with my average a little bit, but we're gonna take a little piece there. What else are we holding? We're in Apple. Our average price in Apple is 182.80s. We're in Delta Airlines. Delta's up a lot today. When is Delta earnings? All right, guys. Hey, we still got 20 minutes. 20 minutes. Oh, man. Did I miss Delta earnings? When were they, dude? Were they this morning? Hey, they were this morning. You love to see it. Okay, I'm in Delta right now, so that's good. You love to see it. Delta? No, they weren't today. When the heck were earnings? Somebody help me out. When was Delta's earnings? Did I miss them? The next one's not until April, which means they just came out sometime. Will Fed cut rates? I don't know. Maybe. I don't think this next meeting they will. I think most people are not expecting it. 2 weeks ago? Okay, gotcha. Yeah. Well, they're gapping up today, probably just from airline strength. You know, if we look at the CME watch tool, though, like, we could look at the probabilities here. Almost nobody's expecting a pause, or almost nobody's expecting a rate cut. Everybody's expecting a pause. This is next Wednesday. Next Wednesday, 2.6% of people are expecting a cut of 25 basis points. But again, it's basically nobody is expecting this. Nobody's expecting a cut. Almost everybody. So, but when we look at March, that's when cut predictions are a little bit more, a little bit higher. You know, 42% expect a cut in March. Most people are still expecting a pause in March, but, you know, we got 1.1% of people expecting a 50 basis point cut, which is, you know, significant. But I think most people are expecting May. You know, that's when a majority of people are expecting a rate cut in May, 53%. 14% expecting, you know, a pause still. But again, 32% of people expecting 50 basis point cut, 53% expecting a 25 basis point cut. So that's the probability. So most likely in May is when we're going to get our first cut. But it could be earlier. It certainly could. I don't think it's going to be next week. But, you know, we'll see. Maybe. What would happen if there's a surprise cut? I don't know. All right, guys, we still got about 20 minutes left. 20 minutes left. Again, we are going to throw it in sub-only mode. And so announce yourself. Show us you're subscribed. Oh, we are in sub-only mode. What market expect higher GDP or lower? The question is, what does the market want? Does the market want higher GDP or lower GDP? That's the true question. Like, what does the market actually want here? Does the market want higher GDP, lower GDP? You know, with Powell specifically saying how the labor market needs to be pushed down over the last 6 months, does the market want less people working? You know, which would be higher jobless claims numbers. Higher would be seen as better if that's the case. Does the market want weaker GDP? I don't think so. I don't think the market wants weaker GDP. That's more indicative of recession fears. And I don't think the market's there yet. But it's certainly possible. And the question, chat, that I have for you guys is, what do y'all think? Do y'all think the market wants less or more jobless claims? Do you think it wants higher or lower GDP? I'm just going to assume the market wants higher GDP because economic growth is good. The jobs question, with specifically jobless claims unemployment filing, I think is the more interesting one because of the labor market has been, as Powell quoted saying, too robust. It's been too strong. Basically, too many people working, spending. It's having a hard time pushing inflation down to the 2% target. So yeah, that's the question. And I don't know. We'll see. We'll see. It's interesting for sure. We got Nvidia up here pushing up. AMD pushed up a lot today. Here's the SPY itself. SPY at 485.60s. Gold bouncing up a little bit as well. Jay Bravo. I mean, listen. This man's hair is out of control. This man's hair is out of control. There's some jokes to be had, but I'm gonna, you know. What correlation does gold and labor data have? Gold is seen as a long-term inflation hedge. GDP is the total amount of spending that happens every year is what GDP data is. It's basically spending data. All right, guys. Hey, we still got 15 minutes. 15 minutes before this report comes light. He acts like Johnny Bravo. I remember Johnny Bravo, dude. That was my time, bro. I grew up in the 90s. I remember Johnny Bravo, Powerpuff Girls. You know, you had a bunch of good shows, bro. You had a bunch of good shows. Dexter's Lab, you know. Fairly Odd Parents, Ed, and Eddie. Yeah, 100%. That's my time. That was my time. All right, guys. SPY moving up a little bit. Really interesting nuance of markets right now because the Q, when you look at the Q is much stronger than the SPY. And so what does this mean? This means that we have weakness and some other stuff, but the SPY bouncing back up. The SPY is now over the 200 EMA, over the volume weighted average price level, held at the previous closing price. You know, Tesla is down to 189, so that's been dragging a lot of stuff down with it. You can see stuff like Microsoft here as well. Microsoft at 404.40. So Microsoft over $400 still. Delta bouncing up a little bit. Apple still moving. Doug was my favorite. Patty Mayonnaise. All right, guys. Look at the market pop. Look at the Q bounce. Football head. Yeah. All right, guys. AMD at 181s. Delta at 3830s. Boeing was at 203 earlier. Apple bouncing back a little bit. Apple almost up to 195s. Or 194.50. Yeah, gold moving up a little bit. Gold up to 2017s. But what does a leak mean here, though, is the question. Like, what does a leak mean? All right, guys, we still got about 12 minutes left. Look at gold push. Look at the Q move. Microsoft is getting up there, too. All right, guys, gold up to 2017s. 2017s. Amazon still red on the day. But there's the Q. We could also look at Bitcoin here to see what Bitcoin's doing. Bitcoin at 39.8. Again, you can see Apple at 194s. Tesla looking hella weak this morning. All right, guys, we got 12 minutes here before the numbers come out. 12 minutes. All right, guys. 10 minutes here, 10 minutes. Q is moving up a little bit. Microsoft bouncing. Apple bouncing up. Let's look at Tesla. I think we got to. Here's Tesla. Tesla still hella weak down here at 188s. 188.70s here. 188.70s. You still got 10 minutes. We got about 700 people here live. Oh, the ECB decision, guys. My bad. I completely missed the ECB decision. ECB holds key rates as expected. They paused. They say the declining trend in underlying inflation has continued, and the past interest rate increases keep being transmitted forcefully into financing conditions. Here's the ECB statement right here in chat. Again, they paused, which is what was expected. They paused. This dropped 5 minutes ago. So, yeah, GDP data dropping at 8:30 Eastern Standard Time today, guys. Still got about 10 minutes left until the data release. But Amazon up there is at 156 or so, 156. What's the expectations for Tesla share price? I'm not sure. What do y'all think Tesla's going to do? Well, Tesla bounced today, team. I'm not sure. I really don't know. Will Tesla bounce? What do you guys think? Will it? I think it depends. Whole market's kind of flat. Yeah, here's the main event of the day. We got 9 minutes left, team. 9 minutes left. We got the timer in the top left. It's a little early, but that's okay. Tesla down at 189. There's the Q at 426. Q was very flat as well today. But again, look at that 200 EMA volume weighted average price spot. It's just a really good level. Hey, what's up, Jonathan? Bounce probably end of the week. 175 bearish. I think next week it will. 170 bullish. Now for the main event. Yeah. Delta's up today. Apple's trying to bounce. Again, we're kind of flat right now, though. Here's Tesla at the left side or the right side. Here's Apple on the left. Here's the Q in the middle, which is the NASDAQ. NASDAQ 100. Hit the live button, P. There's not a delay. You just got to hit the live button, brother. All right, guys. Hey, we got 8 minutes here. 8 beautiful minutes. Let's see if we get some good stuff today, guys. 8 minutes. No, I think it'll bounce next week. It'll probably go to 179. I'm going to get a whole bunch of $200 call options for March 8th. Hey, good luck. What's your prediction on gold price? I don't know, man. I'm a big believer in gold long term, but short term is volatile. Yeah, I mean, P, so this is a little bit early. So really, we've got about 7 minutes. This thing still says 6:30. We got a little bit over 7 minutes, actually, but now we have almost exactly 7. I'm at the airport. You're watching my stream from the airport. Hey, thanks. I appreciate it. 7 minutes, guys, 7 minutes. I need to get like a drum roll sound effect. I really do. I need to get like a drum roll. Are you buying if GDP comes in higher or lower? I don't freaking know, man. We'll see. It depends. All right, the Q is looking strong. It's at the top of the range here, but we do have like, I don't know if I would call this a triple top yet, but we're getting up there here. I mean, you can see the top level on this chart. You know? Like, I don't know if we're there yet, but you can see that level coming in. Tesla's still way down here at basically 189.50 or so, 189.50. Amazon bouncing back up a little bit. Gold still consolidating pretty neutral way. Oh, yeah, good luck, Lou. When you sold AMC, it went up. I'm still holding AMC to put it into perspective. I'm holding less shares. AMC's down to $4 a share, bro. It hasn't gone up. No, I'm good, P. I appreciate it though, man. I just don't need an intro or anything like that, you know? Not really. I don't think it'll rebound that fast. I'm assuming you're talking about Tesla. Yeah, maybe. Again, a little bit over 5 minutes, guys. About 5 minutes and 6 seconds or so. We got about 800 people here live. Diamond Hands, hey, the greatest. All right, team. Again, gold still consolidating. Tesla still in that downwardish trend. Q at 426.78. Gold at or Apple at 194s. When is the last time Apple broke 200? All right, guys. Hey, we got about 4 minutes left. 4 minutes. So Apple last time broke 400. 199.60s is the lifetime high. So we're close. We're up there. Do you think Tesla price is politically driven at all? Probably not. I think it has to do with Cybertruck stuff and disappointing numbers in some ways. All right, guys, get ready. Hey, we got 3.5 minutes, a little bit over 3.5 minutes. So be ready, team. Be ready. Looking at our poll numbers ahead of this report. Get your last minute predictions in. Guys, GDP, we got about 59% thinking better than expected, 41% thinking worse than expected. Looking at our other polls here, we got one that says 68% think lower than 2% for GDP, 32% think higher Will we come in higher or lower than the GDP release here? We still got 3 minutes, but again, remember, GDP is expected at 2%. Jobless claims expected at 200,000 for initial claims. Durable good orders expected at, I believe, 0.2%, if I have that reading right. I believe it's 0.2%. Yeah, so durable goods, core durable goods is the big boy one. That is expected at 0.2%. Again, core durable good orders, GDP data. We got all of this stuff up. We are ready here, guys. We are ready. All right, we still have about 2 minutes. Is higher better for markets or not? It depends. It's super nuanced, to be honest. Again, does the market react positively or negatively to this? Look at the Q pull back a little bit. Again, report drops in 2 minutes, team. 2 minutes. Make sure you hit the live button next to the play button. Okay, nice Ian. 1 for Green Day, 2 for Red. All right, guys, we got a minute and a half left. Make sure you hit the live button next to the play button. You want to make sure your live button looks like this, team. Again, you want to make sure your live button looks like this. You want to make sure it's red. If it's red, you're caught up on stream. If it's white, you are delayed. And so hit the live button. Make sure you're caught up on stream. We get thousands of people tuning into this because we cover it very quickly. Here, guys, we cover it quickly. So again, subscribe if you haven't yet. Hit the notification bell. We appreciate the love. Market doesn't care. Buy Meta. 2. Is there any news today? Yeah, there's GDP, jobless claims, unemployment filings in less than a minute. You can see the timer here. This timer's a little bit early, guys. It's a little bit early, so I'm going to pause it and just count it down myself. Again, we got 40 seconds left, 45 seconds left. Yeah, don't be that guy in chat talking 10 minutes behind. Make sure you hit the live button next to the play button. Make sure you're fully caught up on stream. Again, subscribe if you haven't yet. I appreciate the love. Thanks so much. 30 seconds here, guys. 30 seconds. Here we go. So again, we got the NASDAQ 100 in the middle. We got Tesla on the right side. We got Apple on the left side here. Will we get some improvements in price? Improvements in price. 20 seconds. 20 seconds here, team. All right, let's do this. 10 seconds, guys. 10 seconds. All right, here we go. Jobless claims came in at 214,000. 214,000. Way higher than expected for jobless claims. Way higher than expected for jobless claims. GDP came in at 3.3% quarter over quarter. 3.3% for GDP. Jobless claims came in at 214,000. Higher than expected jobless claims. Higher than expected GDP. Higher than expected core durable good orders. And so higher than expected all around. The market has not liked this, probably because it's too much economic growth for inflation fears. But the market has reacted negatively so far, but it's retracing this big move. Again, 2% is what was expected for GDP. It came in at 3.3% quarter over quarter for GDP. 3.3%. Again, much higher than expected here, guys. Much higher than expected. 3.3% for GDP. Higher than expected versus 2% expected. Jobless claims came in at 214,000. Versus 200K expected, higher than expected for jobless claims, indicating more economic growth. Again, 214 versus 200 expected. We're going to put this up on screen. And again, we also had durable good orders. Guys, durable good orders. Durable good orders came in higher than expected, I believe, as well, at 0.6% for core. So, yeah, higher than expected everywhere. We'll put this data up on screen. You can check it out there. Look at the market. Love this. Market's ripping up, broke highs of the day, broke over that triple top. It doesn't mean it's going to necessarily hold, but so far the market's up. Again, people saying we're going to hit a recession and all this stuff. GDP's growing too much for that. Again, 3.3% GDP data for this prelim GDP data. 3.3%, way higher than the 2% expected. Again, last time for GDP specifically, we came in at 4.9%. So we're increasing less, but still. Again, market's up. Q just broke highs. of the day up to 427. Let's put gold up on the screen here. Gold starting to move up a little bit. Initially a bad reaction though, but gold up to 2017s. Tesla at 189.30s here, guys. 189.30s for Tesla. So Tesla's still weak. Look at the Q rip. Q breaking highs. Gold breaking highs up there too. Gold just broke highs of the day as well, I think. Not quite highs of the day for gold, actually. But the Q, look at this push. Q's breaking highs of the day here, team. And again, remember, subscribe. We cover this data every week live right here on YouTube. Again, GDP ripping up. Jobless claims. I don't know. I think okay, so just to put this data into perspective, okay? Jobless claims numbers came in higher than expected. What does that mean? That means more people saying they are out of work, less people working, which is actually what Powell wanted. He said the labor market was, quote, too robust. Too robust is what Powell said. And so in that regard, that's a positive thing, I think, for markets. I think the market wants that. I think the market wants a less strong labor market. It's stopping it from hitting the 2% inflation goal over time. That's what Powell specifically stated. All right, that's the first nuance of this report, number one. The second nuance is that GDP came in higher than expected, and so people predicting recessions and depressions, we're not there. We're not there. GDP is strong. And so I think that's the nuance. I think that's why the market is reacting in a positive way, is because the labor market got pushed down some, which is what the Fed actually wanted, but GDP remained strong. And so I think that's the nuance of today's report. The economy's doing all right, I guess, is the point. Again, let me know what you guys think. If you guys think that's good, bad, let me know. Yeah, but Marley, you're being too polarized. He said, yeah, no one working and putting everything on credit while the highest debt ever, but GDP is up. Unemployment's still low, brother. Unemployment's still low, man. You know what I mean? So jobless claims is a weekly report. You know, so if it increases, it doesn't mean nobody's working. You know, a lot of people are working. Unemployment's still very low, in all honesty. I think people are optimistic regarding GDP because, again, GDP was expected at 2%. And it ended up showing up at 3.3%. And so I think that's just making people optimistic. You know what I mean? All right, guys. Delta still pushing up a little bit. Gold still moving up some. Again, Tesla's still weak. Q testing highs of the day. And again, if you haven't already, check out Top Step. Top Step is a sponsor of mine, but if you want to learn to day trade, this is the best way. You can either put up thousands yourself, but like we were talking about earlier, almost everybody loses money in day trading. Almost everybody loses. And so you can put up thousands yourself trying to look cool in markets and probably lose your $1,000 plus account, or you could try a funded account program. You can day trade the S&P 500. You can day trade the NASDAQ, basically the SPY and Q price action. Patterns are very similar to blue chips. There's just no PDT rule. You can buy market, sell market, all that good stuff. Very similar to day trading stocks, just no PDT rule. And the benefit of this is that they give you a demo, they test your skill, they have free funding coaches, tons of great resources. If you pass the test, they fund you the same amount as the demo. The base one's only $49. You get a $50K demo. If you pass it, you get $50K in funding with a 90% split. And so it's the best of both worlds. If you pass it, you still keep 90%. If you lose, you're only out $49. So much less than putting the money up yourself, less risk, but it still teaches you how to trade under pressure. I think it's just a great way for new traders to learn how to trade. But again, they are a sponsor of mine. I'm certainly biased in their favor, of course. And again, if you want to check them out, great way to help support the channel. Great way to learn day trading with limited risk. And if you're good enough, you can get funded. If you don't have that much equity to put up maybe and you're good enough as a trader, you can get funded, trade, make money doing it that way as well. I can't guarantee you're going to make money. But again, if you want to check it out, they are a sponsor of mine. Check out the link right here. Appreciate the love, guys. The economy's not slowing down enough to lower inflation. Well, inflation's been slowing for sure. Lowering inflation is a different story. Lowering inflation almost never happens. Look at the Q rip up here, guys. So the Q bouncing pretty strong. Look at the huge bounce on the Q at the 427.80s. Should I cover the ECB press conference with Lagarde speaking? I know there's an ECB press conference with Lagarde speaking. Should I cover it? It's in 8 minutes, though. I think the ECB press conference is going to be too long. She doesn't speak until 10:15. That's a long time. I don't know if I feel like. And then she speaks again at 11. Yeah, that's too long. I'm not doing that. We got enough stuff to cover over the next few days. We also have new home sales we have new home sales dropping also, guys. So be ready. I mean, I'm going to keep streaming. Thank you, John, for the solid data and excellent background music. And always, hey, thank you, free refills. I appreciate the love. Thanks so much, bro. Cover everything. You're better than CNBC. Hey, thanks so much. Yeah, I mean, again, y'all have to understand, inflation slows over time. Okay. You know, like people have to understand the true nature of economics. It really is something that most investors and traders need to understand. Look at gold pump. Gold pushing up to 2020. Q's still moving up. But Ian, you got to understand, guys. You got to understand that, number one, inflation happens over time, right? And so if you sit on cash, your dollars are going to get devalued over time. You know, so if you sit on cash, your dollars are going to lose value over time. It's an inevitable thing. It's an inevitability, to quote Thanos. It's an inevitability. You're going to lose freaking money over time if you sit on cash. All right, that's number one. And so if you don't trust the stock market, you could buy bonds, you know, over a 10-year period, make like 40% on your money. You know, you invest 100K, in 10 years, you'll make 40K from that, basically, in bonds right now, roughly. And so, you know, but again, if you don't invest, all investing is, in every facet and vehicle of investing, is a hedge against this inflation increase, the devaluing of dollars. That's all that's what investing is. And so you could invest in a lot of different ways. You could buy gold. Gold has 7x'd over the last 20 years. You could buy real estate, you know, and whether you have a mortgage or not, you're still hedging against inflation for a few reasons. Number one, if you buy cash, real estate for the most part at least keeps up with inflation. Right, that's number one. Number two, even if you get a mortgage, right, say your mortgage is $2,000 a month, because dollars are devalued over time, that $2,000 is going to be less significant, less buying power. It's going to be less significant over your general income, hopefully, if your income is increasing with inflation. And so either way, real estate is a hedge against inflation. Gold is a hedge against inflation. The S&P will give you about 10% a year. On average over the last century of price action, right? So that's a hedge against inflation, of course. And so it's all inflation hedges: bonds, real estate, gold, precious metals, you know, the stock market. It's all inflation hedges, but you got to do it right. And that's why most people that are always predicting long-term bearish action in markets, that's what they don't understand, is that the market's going to move over time, for one of the reasons being inflation's going to increase. And what happens when inflation increases? Companies are going to have to make more to stay the same. And over time, them making more is going to boost their price higher and higher, thus making the S&P 500, the NASDAQ, and Dow, whatever, move up over time partially from inflation. And so, again, I guess the overarching point is if you're not sticking money in some of these things, you're losing money over time. You know? Let me check back. E-mini building a nice node here. Will Tesla have a big sell-off after the bell? I'm not sure. We are finally getting a dip in the queue, though. Look, here's the dip in the queue. A pullback in the queue. All right. All right, guys. So again, we got the Q at 427.50s. All right, the NASDAQ still sitting at 17.7 thousand, 17.7K. Great news for the economy. Almost zero chance for a hard landing. Yeah, I don't think, again, people pushing a recession, I don't think understand what a recession means. Again, Tesla's still at 190s here, 190s. All right, so we did get this little dip in the Q. I might buy the Q here. We're gonna buy this dip. 25 shares of the Q. We might add a little bit more. I need a little bit more. I'm 50 shares in the Q. And again, the other benefit about Top Step is that, like, if you want to do what I'm doing right now, like if you want to buy the NASDAQ, which is the NASDAQ here, like in stocks, this is so much equity, just to show you. Like in stocks, again, I have the equity, so it doesn't really matter to me either way. But like to do what I'm doing now in stocks, you're going to have $20,000+ in equity in a stock account. You know, the beautiful thing about futures is that you can do this in futures. There's no PDT rule. You could day trade short. It's just a great way to get exposure to day trading, but you just don't need, we're going to keep this trade small. You just don't need crazy like buying power, and you don't need to get around the PDT rule like I'm doing here. And so again, if you want to try day trading futures, Top Step's the most legit funded one in the world. I'll put the link up one more time. They're a sponsor of mine. I'm biased. ECB press conferences now. All right, so again, we do have the Q starting to push up a little bit here. We're in the Q small. Just kind of playing around with it. I guess we could let it sit. Amazon's starting to really bounce back up. Amazon at 156.50s. So Amazon all the way over the 200 EMA volume weighted average price. Stronger than expected economy means the Fed doesn't need to cut so soon. Yeah, I mean, it might mean we have less rate cut pushes because, you know, rate cuts are going to happen if inflation is under control, and too much GDP growth could signal inflation problems. Now, tomorrow is going to be the big tell of this. Yeah, I mean, part of me wants to buy this dip. I'm watching the NASDAQ too. See if we can push up here. And so we just made about 50 bucks in our funded account on Top Step as well. Up 55 bucks in our funded account. This is our Express funded account. But we just made 55 bucks here. Just gonna try to scalp that and make moves. This is the only channel that trades and doesn't gamble I've ever seen on YouTube. Love it. I mean, we just like, I trade, but again, like, and it kind of backfires sometimes. Like, sometimes traders want to see big gambles, you know, like some traders want to see huge risks and huge gambles, and I'm just not that type of trader. Like, really, I think anybody that watches the stream understands that I'm mostly like a swing trader, investor, economist, like, person. Like, I day trade, of course, but like, I'm not claiming to be like the super duper expert day trader. Like, I'm gonna go ahead and take a little bit off of this Q trade I'm also in right now. I can get filled. I'll just get out on the bid. So I'm just kind of making a little bit of money, and then I'll probably let the rest work today and see what happens there. It's just 15 shares. Yeah, and again, it's a weird spot for me because it's like, I know if I wanted to grow faster, I could take some huge gambling like trades and just take crazy big risks and flash $1,000 plus gains, and then not show my losses and only show my winners. And you know what I mean? Like, I know I could do that and probably get more views, but it would misrepresent what I'm about. And I'm not saying I don't ever trade or lose combines or trade off stream or have to reset or whatever it is. I certainly do. I think the difference for my channel, though, is like, I don't claim to be some guru expert. You know what I mean? Like, I would rather just be honest about all of it and not have to worry about that pressure of being, because pressure kills profits. Like, too much pressure either side. Like, if I tell everybody I'm a freaking expert, and I lose 3 days in a row, we're gonna have some haters that pop out. I mean, we're gonna have haters anyway, but it's just too much pressure. I would rather just tell people, yo, I suck, don't copy me, you know, and not have to worry about it. Sell courses and mentor, and then sell rugs. Hey, top 3 rug salesmen in the world. You're a good guy. Trade for yourself. Yoda has taught you well to control your ego. Dude, I got the top 3 largest egos in the world right now. Delta's getting fairly skewed by profit taking, but overall everything's looking pretty bullish. Yeah. Pressure does kill profits for sure. All right, guys. So again, the NASDAQ is up there. Tesla's still looking pretty weak. Gold trying to bounce. Amazon is up here as well. What's the difference between sell market and sell the bid? Sell the bid is a limit order that gets you filled at the bid price or better. Selling the bid will get you an immediate fill because it's what the buyers are bidding on, so it'll get you an immediate fill most of the time, but it's technically a limit order. And in pre-market, technically right now, you can only use limit orders. You can't use market orders. You can only limit in and limit out in pre-market trading, as opposed to a market order, which is designed to get you filled immediately regardless of price, right? So market order just means whatever the market price is, get me in there now. Market orders get you, there's no limit, there's no ceiling to where you'll get filled. If you get a bad fill with a big spread, it's certainly possible with a market order. A limit order has to get you filled at that specific limit price. So in that case, it's the bid price, which is what the buyers are shooting for. So yeah, limit orders have to get you filled at that specific price or better. And again, time is no factor with limit orders. Market orders have to get you filled immediately, so time is a factor. And whatever the market price is at that period of time is what you're going to get filled at. Gold bouncing again at that 200 EMA volume weighted average price. Gold's kind of choppy today. We got new home sales coming out today. Expectations are 645,000 for December new home sales. 645K. All right, gold still pushing up. Delta just broke highs of the day here. The Q still pushing up towards highs. I'm gonna get some lag in my keyboard. Weird to see gold and equity markets go up simultaneously. Do you buy gold? I like gold, yeah. Amazon at 156.40s. Gold's still pushing up. It's at 2020s now. Look at the Q moving up. We do have a little position on the Q. Slight, small position. All right, so look at Tesla bounce. Q still moving. Gold's still up there. Time to change the keyboard batteries. Yeah, I spilled coffee all over this thing the other day, so that's probably what it is. Amazon looking very strong. Delta, not looking bad either. Delta's helping my portfolio today, although I'm still red. SPY's still looking good. All right, Tesla bouncing up. There's gold, like, kind of choppy sideways. Here's Delta at 39.03s. Q pulling back a little bit. Again, I'm in a little piece of this trade. Where does it stop? Again, what does the market close today, guys? Let me end this poll. We did a poll. Would GDP come in better or worse than expected? Better, 63%. AMD flying up, man. AMD's been incredibly strong. Does Tesla rebound today? Yes or no? That's the question. Does Tesla rebound? Delta still surging up here at over 39s. Again, Q pulling back to 428s or so. 428s. Yeah, I know the ECB kept, they paused still, you know. So I know they paused. All right, guys, there's the Q bouncing up a little bit. Again, here's Tesla at 190s or so. All right, guys, gold up to 2020. Still sideways, though. Amazon now green. Do I want to add to this trade? I think I do. I keep trying to mark it in. Not really the best fill. I should probably try to buy the bid a little bit more if I'm trying to get filled at a better price. All right, so we got 35 shares of the Q here. We got a pretty good average at 427, so our average is all the way up here. So we got a pretty good little average here on the Q. I don't mind playing around with it. Just 35 shares. And so if we get a nice little pop-up, great. We can take some off and then figure out what we want to do with the rest. Yeah, no, AMD has been flying up. It's at almost 180s. Or is it over 180s now? Yeah, it's at 185s for AMD. Look at AMD on the left side. Wow. Look at AMD. Just crazy, man. NVIDIA not even looking anything like AMD. Crazy, crazy. Yeah, I'll be covering them Mopar for sure. We got a bunch of other economic reports then too. So like we've got next week we've got SoFi earnings, a bunch of other stuff too. Tuesday we've got the JOLTS report and CB consumer confidence data, and then the Case-Shiller early. Wednesday we've got ADB non-farm employment change numbers, the FOMC decision. We've got ADB, we got the non-farm employment numbers in the FOMC decision. Thursday, we got jobless claims, S&P manufacturing, and ISM PMI data. And I believe Thursday we have some earnings too. Let me see. Yeah, so Tuesday we've got AMD Microsoft earnings on Tuesday, as well as Google. Wednesday, we've got Boeing earnings in the morning. QCOM in the evening, but Wednesday evening we have the FOMC decision. So we got the FOMC decision on Wednesday evening. And then Thursday next week, we've got Apple, Amazon, Meta, all same day. It sucks, dude. I wish they wouldn't do it the same day, bro. Like, I'm kind of disappointed with this year's earnings season. Like, usually on previous days, they would separate them and have them on each, like, a different day. Next Thursday, we got Apple, Amazon, and Meta all same freaking day. That sucks. Like, that's terrible. You know, you can't spread them out a little bit, guys. Like, come on now. We got a bunch of oil earnings on Friday, too. But next week's incredibly busy because of all that. And then again, in terms of economic payroll data, we got non-farm payrolls and unemployment on Friday next week. Jobless claims, a bunch of stuff. So it's just a very busy day. A very busy week. Like, next week, we got stuff every day, basically. But, man, look at AMD up there, dude. AMD just up to 184th. What a crazy rocket for AMD. Tesla margin calls? Maybe. I mean, we'll see. So the earnings all drop at the closing bell, Sam, on Thursday. Apple, AMC, Meta, or Apple, Amazon, Meta all drop Thursday. And I don't think we have anything the next week, though, which is kind of crazy because it means, like, we got Palantir in the evening on Monday, Tuesday, Eli Lilly, Enphase. We got Snapchat earnings on February 6th. Wednesday, we got Alibaba, Uber, PayPal, Disney on February 7th. Thursday, we've got Affirm, Pinterest. So nothing really big, man. Like, all the big earnings are next week. We got CPI day. Yeah, I really think that's like almost all the big earnings. So earnings season's just going so quick. We got Robinhood, Upstart earnings the week after. Kira will be happy. Valentine's Day, we don't have any earnings. Coinbase earnings on Thursday, February 15th. But yeah, just weird. Next week, we just got a gang of stuff. Yeah, I'm looking at other big earnings. Like, that's kind of it, man. Like, we got Nvidia Wednesday, February 21st. So we do have Nvidia and Rivian. Those are pretty big. Let me see. So, let's see. We got this. I want to only confirm dates. Yeah. SoFi, Supermicro, Semiconductors, Pfizer. Robinhood's starting to push ads. I got conviction. We'll see. AMD's just hella strong. It's starting to finally pull back a little bit. So the question is this a buy now for AMD? Just crazy big moves. All right, guys. Amazon at 157s, almost 157s. All right, Tesla, again, almost a 190. AMD at 183.20s. Live Fed cutter, please reply, everyone, after this JDP data. I don't know. We can look at the CME watch tool now to see what's more probable now. Like, look, so Still the same, basically. 97.4% of people expecting a pause next week on Wednesday. Also, guys, if you haven't already, join our Discord. We are trying to build our Discord up. And so if you haven't already, here's the link. Yeah, we're almost certainly going to pause next week. There's our Discord link. Gold's still trying. Amazon's still trying. Delta's still trying. Again, AMD's having such a big impact over markets, though, just being so tech heavy. AMD is just dragging everything else up. Rate hike. Yeah, we're not going to raise rates. Yeah, we're not going to raise rates. Yeah, I mean, the FOMC is usually going to go as expected. It's very rarely going to pivot out of that expectation, for sure. You know, most of the time it's going to be as expected. That's what they do. Gold up to 2022. Delta at 39s. We are getting some push-ups in the queue here that we're trading, so we are getting some moves up in the queue. All right, so we are getting this bounce up. See, I'm still, like, we're up a small amount. We already taken a little bit off, but again, we're also watching Tesla too. Delta's been ripping up. Boeing is down some today. Let me see. No, that's not too bad. We're still green on our Boeing trade. Gold finally trying to get up to 2022s, but man, AMD has just been freaking crazy. Yeah, I'm watching this here. We're still in it. We're going to be trading some futures too. We built up a little bit of cushion on our futures funded account. Imagine ripping up to absolute all-time highs on 3.3% growth, which is trending down, and unemployment, which is trending up. Yeah, I understand, Adam, but like I think you're not understanding the nuance of the market we're currently in, brother. So basically, just to give you like kind of like a history lesson in markets, guys, over the last 3 years, 4 years since 2020 and the pandemic, the market has been very different than convention, right? Like the market has moved in a different way. It hasn't moved necessarily with what was conventionally good, and it's just been a different market. Just to give you a history lesson of it though, guys. So back in 2020, we had the pandemic. People got laid off. Jobs were very low. We had quantitative easing with stimulus checks, right? And so basically the government had to print a bunch of money. We had quantitative easing. People got those stimulus checks and spent them, and that made inflation skyrocket up to almost 9% a few years ago. Almost 9%. There's a rip in the queue. Take a little piece of this off, ride the rest up. So again, with that quantitative easing and stimulus check money printing, people started spending a lot more because they got free money basically. And one of the consequences of free money is that people spend a lot more. You see it in the boost of like luxury goods, right? Like Rolex prices spiked at the time. Bernard Arnault, now one of the richest, he's always been, but he's in the top 3 richest people in the world. He's the owner of Louis Vuitton. And so again, stimulus checks, quantitative easing, money printing happened, and people started spending money, and inflation skyrocketed up to almost 9%. To the point where after that, the Fed started aggressively raising rates and taking an increasingly hawkish stance in markets. And so the Fed's job at that point in time, with inflation all the way up at 9%, was to discourage the labor markets, to stop spending as much. And one of the things that Powell has been pretty consistently saying is that he wants to push down the labor market. So basically, good is bad, bad is good. Too many people working is going to be seen as a negative, right, in that regard, right? And so the market, and this is something that's been pretty true for the last year plus, in which higher jobless claims has been seen as a more positive thing, because more people saying they're not working means what? It means less people spending, less inflation problems. And in a market that's increasingly fearing inflation over the last few years, less economic growth is seen as a positive thing. Now, during this period of time with AI, during this period of economics, we also had AI skyrocket and go crazy. And that's where a lot of these increases in price are for stocks, is specifically from the tech sector. Most of these are tech increases, microchip increases from AI. But yeah, I mean, one of the reasons the economy is seen in a more stable way now is because inflation has been slowing. That's something that's not really arguable. Inflation has been slowing. One of the optimistic parts of that is that less people are working. Less people are working, less people are spending. Inflation is getting more under control. And so I guess the point is that the market might not necessarily be conventional all the time. It's not always going to be true to convention, in which conventionally lower unemployment, higher GDP, and more economic growth is going to be seen as a positive. But again, that's not always the market. The market's not always low unemployment is good and economic growth is always positive. If inflation's out of control, which it has been over the last 3 years since quantitative easing happened, the market's not necessarily going to want more spending, more economic growth. The market might actually react positively to less economic growth, less people working, more jobless claims, more unemployment filings, so forth and so on. And so it really just depends on the current nuance of the market. And it's not really like a shocking thing historically. Like we've seen this happen a lot out throughout the last century. And so I guess, like I said, you got to understand the broad economics of things. I know if you tune into the news, or especially if you're really political and you're rooting for one political side, and maybe you hate the current administration and you want them to fail, and you watch the news, and what's the news saying? The news is saying, look how bad things are. These politicians are bad. And both sides do it. I'm not picking sides. I'm not against you if that's you. But you got to understand, you got to understand politics. You got to understand the whole nuance of things, I guess. Gold pushing up a little bit. Let's see if Delta continues to increase. Amazon pulling back. We got a little baby day trade here that we're just kind of sitting back. We got the opening bell at 13 minutes, guys. 13 minutes. We'll see what happens. But yeah, that's where we're currently at. Yeah, maybe Tesla does. I don't know. You know, it certainly reacted negatively to earnings. This is a strange combo because unemployment is higher, but so is GDP. This should push out rate cuts. I bet the market won't like the numbers. I mean, the market did like the numbers, though. You know, you got to understand, like, what the expected number is. Like, 2% was what was expected for GDP. So I think you have to think about it in this way. I think one of the reasons you can think the market went up, one of the reasons the market probably pushed up. Other door. Yep. Yeah. Love you. Yeah, that's all right. All right. All right. So, anyways, what I was about to say is to Adam's quote. He said, "This is a strange combo because unemployment is higher, but so is GDP. This should push out rate cuts. I bet the market won't like the numbers." Just to clarify some things here. I think these results. One of the reasons they were so positive is this, right? One of the reasons they were so positive is this. Okay. The reason they were so positive is because, number one, the market. It's a balancing act between recession fears, which would mean the market, if the market's fearing a recession, they want more economic growth, lower unemployment, right? That's one side of things. The other side of it is inflation fears. If the market's fearing inflation, it wants less people working, higher unemployment, less economic growth, right? Because all of those things contribute to spending. And so there's two different parallels there. And so I think with this specific report, it showed one thing. It showed GDP coming in higher than expected, signaling less recession fears, but also higher jobless claims, signaling less people working as well. So we got less people working, less inflation fears, and we got higher GDP, less recession fears. Those two things combined causes optimism, and now the market's pushing up a little bit. That's my guess, but again, it's just a guess. Maybe I'm wrong. This is futures and stocks. This is futures and stocks. But we trade a little bit of everything, brother. Yeah, so this is one of our funded account programs on Top Step. We're going to put this up and get ready to trade this. I want to keep watching AMD though. All right, guys, market opens up at 8 minutes. 8 minutes. And again, before we trade, I'm going to put this rule up again. Remember, I am terrible at this stuff and have no idea what I'm talking about. Good luck. Hypothetical or simulated performance results have certain limits. All this good stuff. Understand that some of these are combine accounts. This is an express funded account on Top Step, just to clarify. But understand these rules, guys. We are not investment professionals. If you lose, it is not my fault. I have no idea what I'm talking about. And if you copy me, you're liable for whatever happens because I have no freaking idea what I'm talking about, guys. There you go. Don't sue me, basically. let's just say it's AI, much simpler explanation. Yeah, but market's nuanced. You know, there's a lot of nuance behind markets. A lot of people don't understand. And again, the biggest mistake I see most people make is that they let their political affiliation influence their stock market predictions. You know, and they watch the news, and a lot of the time the news is super polarized one way, regardless of which side you're on. And they let that news influence their stock market outlook and bias. And that's typically a pretty big mistake. You know what I mean? The news's job is to make things seem like the sky is freaking falling. You know, like that's their job on both sides, And so I think with this type of stuff, you got to separate yourself from some of my best trades were trades where everybody freaking yelled at me not to do it. You know, yeah, some of my best trades. You know, I bought Target, and when Target was, everybody was, and I like Target as a company. I go to Target, you know, you buy 3 things, you spend $500. There's usually, so they've got to be making money. Number one, there's always a bunch of people there, you know, but when they have all these things that go on, Target ended up dipping down big percentages down to like 107. I loved buying that dip. Everybody yelled at me, told me it was a terrible trade or whatever. And now Target's almost up to 150. And so some of my best trades are trades in which people get too political about, and they end up, you know, missing out on opportunity. Is the easiest way to put it. Anyways, we are still in the queue here. It's a Fed's market. Yeah, we got new home sales dropping live too. New home sales coming out soon too. It's like a choo-choo song. Will you cover Intel earnings today? Probably not. I mean, we might report on them, but whether we stream them is probably not going to happen. All right, so again, we're up a small amount on our funded account today. Up a whopping $55 on our Express funded account on Top Step. Part of me wants to buy this dip. Where's AMD at right now, though? AMD just acting crazy. We got 5 minutes. I'm gonna buy this. Kind of risky. It's a funded account. We're already up on the day. All right, we just made another 50 bucks. We are up on this funded account about $115 or so, give or take, minus commissions. So a nice little cushion into the opening bell here. Little scalp there. And I see AMD kind of covering this candle. So that was one of the reasons we bought this. You should have listened to your wife yesterday and shorted Tesla. Yeah, she was like proud of herself, man. She called me and she was like, see, baby. You know, I was right. I know. I was like, I see you. You know. Yeah, new home sales drop at 10 o'clock, at 10 a.m. So. And again, if you want to day trade with me on Top Step, funded account program and futures, they give you a demo. They test your skill. If you could pass the test, great. If you lose, you're going to, again, I got to tell the story. And this is a very common tale. All right. When I first got started day trading, I watched the movie The Big Short. It's a funny story. I watched the movie The Big Short. And in that movie, I saw how much, I was always like a chess poker player. I love poker. I love chess. When I watched that movie, I realized how much money was floating around these markets. And so I got really interested in the stock market. I came home and I Googled day trading, and what pops up? Freaking Tim Sykes, financial freedom. You can get rich if you just buy my trading course. You know, millionaire students. Look at how much I'm building hospitals and wherever, you know. But buy my mentorship program. You know what I mean? All that nonsense. And so I'm sitting there thinking, oh, well, man, I'm about to get rich, you know. I'm about to put up my $500 and we're going to roll that into $300K, in 2 weeks. Let's do it. And anyways, I put up like $4,000. I talked to Carol at the time, and Carol was like, bro, do not do this. Like, do not do this. And I did it anyway. And I lost it all in 3 weeks. I used a platform called SureTrader, an overseas brokerage that gave you crazy high leverage. Ended up day trading Tesla and all these crazy stocks and just losing boatloads of money. I lost $4,000 at the time, and this was like 7 years ago. So $4,000 with inflation was a lot more. To me, and inflation-wise, it was a lot more. Lost it all. Actually quit uploading for like a year straight on this channel and didn't start uploading for a year or so afterwards. And so we finally started uploading again. And when we came back, we had risk management. But again, the point is, when you're new, you're almost certainly going to lose, right? And so again, you can try to be like me and put up thousands yourself and probably lose it and almost cry. You're definitely going to want to cry, okay? Or you could try a funded account program like Top Step. This is a great plug into Top Step. If you haven't already, the futures market, you can day trade short, buy market, sell market, no PDT rule. You can see I can buy market, sell market, no PDT restrictions. They fund traders if they pass their testing. So they give them a demo, they test their skill. The base one's only $50 basically, $49. And if you lose, you're only out $49. Versus me losing $4K in the beginning, it's much cheaper. You still learn how to trade under pressure. They've got great resources, free funding coaches. And again, most day traders lose. And so this is just a much cheaper way. You can day trade the S&P, NASDAQ, no PDT restrictions. Again, if you want to check it out, here's the link. They are a sponsor of mine. They pay me money. I'm super biased in their favor because of it, but check them out. There's the link. Carol is a genius. Let me hear my pup, Bruce. All right, guys, we got 20 seconds here, guys. 20 seconds. Poor Bruce. Bruce must be hungry. All right, guys, 5 seconds. 5 seconds. Ouch. I'm sorry if I just yelled in your ear, but that was loud. All right, here's the opening bell. Big pullback in the Q. Big pullback in the NASDAQ at the opening bell. Now, guys, big dip. Big pullback. AMD dumping under VWAP now. Part of me wants to buy this up. Maybe I should. Maybe I shouldn't. I feel like it's going to retrace some at least, though. And there's the retracement. Ah. Amazon breaking lows. Look at that big, beautiful retracement. I should have taken it. Oh, well, it's all good. When you know, you know. All right, Q dipping down some here. All right, look at AMD. AMD is the one falling right now, guys. AMD is dumping down here. It is dipping down. AMD is down to 182s, 180s. AMD correcting a lot in pre-market. A lot. Be quiet, Bruce. Boeing all the way down under 206s. AMD dumping down. Gold falling down. Amazon dipping down some. This is a massive pullback. I'm going to buy this now, though. We got a cushion on the day. Hit me with it. Retrace back up there. Do it now. Punished. Don't catch a falling knife, guys. Don't be like me. Up. All right. Well, we just made $70 or so. The whirlwind of emotions, guys. The whirlwinds of emotions. We did get that retracement. Look at that big retracement back up. AMD bounced it a little bit up. Still under VWAP though. Bouncing right at that 200 EMA level on AMD. Look at that. Look at that huge retracement. I should have stayed in it. Look at that huge retracement back up. Look at the Q bounce. Again, right at the 200 EMA volume weighted average price level. We talk about it a lot. Look at that huge retracement in the Q. Amazon, though, is dumping down. Amazon at 154s right now. 154s. Consolidating here. Where's Tesla at right now? Tesla's back up. It's back up to 192s. I mean, hey, I'm for it. Delta Airline flying up at the opening bell. We're in Delta right now. You love to see it. Look at this upwick on a 5 minute. I mean, this is a 5 minute chart here, team. So we are. Look at this upwick on a 5 minute chart. That's a crazy big upwick. Look at AMD start to skyrocket up. The Q back up there as well. We're still in the Q. We're green, but. All right. All right, guys. So part of me wants to buy this dip. I'm watching AMD though. I think it's gonna have a big influence, but I'm gonna buy this 5 minute NASDAQ pullback here. Very close to cutting this. Luckily, we got a cushion on the day, so we're kind of flat here, but I'm going to go ahead and cut that and get out there. So we're actually slightly green on the day. And it looks like cutting that was the right move. I see AMD start to fall, and so that doesn't look good. If AMD remains choppy, the rest of the market's almost certainly going to come back down with it. Delta Airlines, man, up to $40 a share. Good for it, man. Tesla completely reversed to the downside. It's at 186s now, 187s. So Tesla's looking weak. Q is now pulling back with it. so another big retracement candle here. I'm gonna try to buy this and see if AMD can catch a rip. Kind of a weird iffy day. Kind of flat here, watching everything else move. Just kind of going back and forth. I'm trying to let the problem is Tesla is dragging the market down too. Such a choppy few minutes here. There we go. All right, so we just made another 150 or so on that trade. Back to green on the day. You know, the downwick pressure certainly helped, you know, in all this stuff. So, like, I see some reversals and everything. Look at Delta surge up. Delta still looks good. Tesla bouncing back up a little bit, too. Still weak, though. Amazon moving all the way back up. Boeing fighting its way back up as well here. I wouldn't say Coinbase is ripping. It's up today. I wouldn't say it's ripping, though. It's actually technically down in the last 2 days. Bitcoin's back up to 40K, though. That's good. Apple's been up today. Tesla's kind of downtrending. Tesla back up to the volume weighted average price. Let's see if it holds. All right, again, NASDAQ consolidating back up some. The Q is very flat. It almost looks like a bear flag. So I don't know. I guess it depends on ultimately what like Tesla does up here. We do have new home sales data coming out. Tesla rejected at the VWAP level. That looks weak. I'm going to short this now. We're going to pivot to shorting the Q now. All right, we're going to go ahead and cut that. So we are out now. We're up about 200 on the day or so trading this. AMD's ripping up, so I don't want to hold this long. Apple's looking kind of weak too, though. Where's Microsoft at? Microsoft's very flat too. Very interesting. I mean, new home sales might be an influence as well, but very flat. Look how choppy markets are. Y'all just be careful today. And again, you can kind of see my P&L right here. We are trading on Top Steps funded account program in futures, in which they give you a demo. They test your skill. If you can hit past the test, they fund you. If you don't pass the test, you're only out what you pay for it, which on the base one's $49. And so it's a great way. Like if you don't have that much money and you want to day trade, this is a great way to learn, a great way to potentially get funded if you're good enough. So you can basically put up a small amount of money. Top Step base combine's $49. If you could pass their testing, you get $50K in funding with a 90% split, and you get to keep your first $10K in profit. Been around for over a decade, pay out millions, fund thousands a year. Again, if you want to check it out, put the link up. Yeah, there's weakness coming through. A lot of stuff looking weak now. See, but Microsoft just retraced. Oh, now it's looking weak again. I'm gonna short again. It's kind of risky, but I see some stuff coming back down. Go flat again. Let's watch AMD, Tesla. Luckily, we got a cushion on the day, but it's such a choppy day. It's kind of a coin flip-ish day to me. We're kind of flat right now. All right, there's AMD coming back down some. That should help me. What's Microsoft doing? See, Microsoft is down black over the volume weighted average price, though. I don't know if I like that. Tesla's fighting its way back up, too. There's a flush down. Q flushing down. I'm gonna cut this. I don't like this at all, and I might be wrong here, but I see Microsoft pushing up. I see Apple trying to bounce back up too, and so if those two things happen, we might have made money on the trade if we would have just held it, but too much risk for me personally. We crack this level maybe, but see AMD bouncing at that 200 EMA. There's the Q bouncing. See, Microsoft starting to push up. It's the largest company and most heavily weighted company in the world. That's the one thing stopping me from shorting. Microsoft up to 405s. Still pretty flat on the day, but it's flat since market open. It's green overall, though. Nvidia app. Microsoft's starting to pop up though. That's the one thing that's stopping me from shorting. So is Apple. Microsoft's starting to go potentially green. Home sales is not super important. Look at AMD, guys. Look at AMD. Look at Microsoft and AMD both pushing up 2 AI stocks, starting to rip. So if they hold, we'll see if it drags the market back to green territory on the day. I mean, the market's green, but it's not like really green. NASDAQ, AMD both over VWAP. Look at AMD at 183s. Apple moving up, it's at 195s. Nvidia pushing up, so I'm seeing a lot of green show up in blue chips. Microsoft up to 405s. I'm gonna short this now. I know it's kind of like the opposite of conventional thinking, but yeah. Don't turn on me. We look so good down there. All right, let's keep going. Yep. There we go. I just need a little bit more. Maybe that's the famous last words. Maybe it was the famous last words. Nvidia's starting to churn up. About to cut it. Yeah, we're just gonna get out there. Too risky. I mean, we're still up 145 or so on the day. But yeah, just a really choppy day. I mean, nothing's really picking a direction. Microsoft's starting to look better. Apple is at 195. So Apple's right at the VWAP. Tesla's actually starting to rip back up a little bit here too. So maybe just bad timing. Yeah, just bad timing, and it's all good. I do see AMD dip down. Let me see what other stuff looks like. AMD's right at that 200 EMA line, though. Alright, we just scalped a little bit. I'm gonna short this. I see AMD starting to come down too. We'll see if everything else follows it. There we go. So we'll see if everything follows AMD is what I'm hoping for. I see a lot of blue chips come down here. Even Microsoft is starting to dip. 70. All right, so we just made about $100 back. AMD bouncing up a little bit. We'll see if we can catch another short. gonna short this again. All right, just made another 130 or so. Scalping it. Watching AMD's breakdown, using that to influence my trades. I think I'm still in the queue. I forgot I was holding the queue. Okay, so we're completely flat on this. I'm probably just gonna unload this position here. Flat on the day on that one. You see AMD bouncing a little bit. We do have that 200 EMA level. We're up small on the day. I mean, we're green. I'll take the green day. Small little bounce, but again, just here's a 5-minute chart. You can see it's choppy from just this candle wick action, like really big up wick, down wick, weakness. We'll see what happens. Hey, nice. All right, so we are getting a big flush breakdown. Maybe I should have taken a longer term short position based off of it. This looks super weak momentum. Nvidia, AMD really bumping down here. Look at that weak momentum showing up. Look at the Q breakdown. Glad I got out of that Q short. Or that Q long, and we've mostly been attacking short positions and where we're up on the day as well. We got a 2.3 to 1 win-loss ratio today, so I'm happy with that. Like, I'll take that. That's pretty solid, I think. How you guys doing today? You guys red or green? Why the SPY looks so strong? SPY's flat. The Nasdaq's flat too. I mean, it just you gotta just zoom out a little bit. Nasdaq's they're both technically green on the day. Tech is just giving a little bit back today. Specifically, you see it with like AMD here. You know. Yeah, it's all good, Beast. Hang in there, bro. What's up, Dirt Bike? What's up, Joshua? All right, we got existing home or new home sales coming out in like a minute. So we got the FOMC meeting. Have they updated February's data yet? All right, guys. Again, we got the FOMC meeting next week. Do we have the semi-annual monetary policy report? Does anybody know when that's going to be? All right, guys. New home sales drop in 1 minute. Expected for December at 645,000, 645K. They drop in about 20 seconds, guys. 20 seconds. GDP's already out, Corey. GDP's right here, brother. Tomorrow we have PCE data. We have the Personal Consumption Expenditure Index. That's what we got tomorrow. That's the biggest report of the week, really, too, outside of GDP. So PCE data tomorrow. It's a big day. All right, here we go. There's the report. New home sales came in higher than expected at 664,000. 664,000 versus 645 expected. 664,000 versus 645 expected. I'm going to go ahead and close that. I'll put this number up. Again, if you haven't already, check out Top Step, funded program in futures. You can day trade with me. There's no PDT in futures. It's what most pro day traders actually do is trade futures. It's also a great way if you don't have that much money, but you're a good trader. You can prove yourself, get funded between 50 to 150K with a 90% split. Free funding coaches. They've been around for over a decade, pay out millions in actual withdrawals every year, fund thousands of traders a year. Again, most day traders lose though, so if you lose, it's much cheaper than putting the money up yourself. I think you got to look at it that way as well. It's only $49 for the base combine. Check it out here. The other sponsor we have is a company called Chart Prime. It's a trading view indicator service that you can use in stocks, crypto, forex, futures. If you check out the NASDAQ here, let's just take a look at the NASDAQ symbol. Genuinely powerful indicators. Again, they are a sponsor of mine. So number one, I can't guarantee you're going to make profit in any of my sponsors. Nobody can. I can't guarantee anything. Nobody can. But Chart Prime, in my opinion, makes things a little bit easier on you. Again, you can use like the NASDAQ. You can use any time frame you want. And again, what I want to show you guys is this. So look at the strong signals. Here's a 3-minute chart is one that I've been really playing with a lot lately. And again, I'm going to preface this with like, look, I can't guarantee anybody's going to make money. Nobody can. But like, look at how powerful these indicators are. All right, so check it out. Look, let me give you a little bit better in-depth look at it. So let me get myself out the way here. And so look at this, right? So I can't fake this. They give you anything on TradingView. You can use this on stocks, forex, futures, whatever. Look at the buy signals. Beautiful bounce. This is a 3-minute chart. Strong. Look at the strong signals as well. Look at the strong signal here. Beautiful breakdown. This one you could say is wrong. This one you could say worked. But look at all the other strong signals. I think that's the only one that didn't work. Like let's count the strong ones. Strong one here worked. That's 1. This one didn't work. That's 1 and 1. This one worked. That's 2 and 1. This one worked. That's 3 and 1. This one worked. That's 4 and 1. This one worked. That's 5 and 1. Again, pretty impressive. Pretty impressive. Even if you just count the regular signals. Buy signal, bounce. This one you might be able to say was wrong. Buy signal, bounce, strong sell signal. This one you could say was wrong. This one worked. This one worked. This one I'm pretty sure worked. This one worked. This one I think worked. Look at the strong ones. The strong ones are the most impressive. This sell signal showed up 3, 6, 9, 12, 15, 18, 21, like 30 minutes ago, and we've had beautiful breakdowns since then. And so genuinely impressive for Chart Prime. And again, you can play around on time frame. You can put a 1-minute chart up and see. The key is finding volatility. Like look at the 1 minute. Honestly, the 1 minute's just as impressive, I think. Look. And so if you wait until close to the open, like look at this. Strong signal, boom. Strong signal, boom. Sell signal, boom. Boom. Look at the sell signal way back here on a 1-minute chart. Genuinely impressive. You got to wait for it to be volatile. Like these are all closer to the opening bell. But I mean, that's the way you got to do it. Like if you trade too early, there's going to be choppiness and stuff. But like if you wait until after the open or close to the opening bell when the volatility is high, I think that's the way to do it. Again, you can check it out. Great way to help support your boy here on this channel. You can try them out right here as well. Again, I can't guarantee anything. They're sponsors, so I'm biased, of course, because they pay me money. But if you want to check it out, there's the link. Always remember, I have no idea what I'm talking about. I might be wildly wrong about anything and everything. I'll see you guys later. Y'all be good. Again, we'll be back tomorrow. PCE data, economic reports coming out live tomorrow. Economic reports. I'll see you guys later. Y'all be good.